Hi, today we're going to discuss something that can cause a bit of anxiety for some: receiving a Notice of Assessment, or NOA, from the Canada Revenue Agency, CRA for short. Now, before you start to worry, it's important to understand that an NOA is a routine part of filing your taxes. In fact, it's an opportunity to review how the CRA assessed your return and to take necessary steps if there's a discrepancy. Let's break down what you should do if you receive one. What is a Notice of Assessment? So what exactly is an NOA, or Notice of Assessment? Simply put, it's a document that outlines a CRA's review of your tax return, whether it's a corporate or personal tax return. It shows a summary of what you reported, including your income, deductions, credits, and the final amount of tax you owe or refund you're getting. If everything matches up, great. But sometimes the CRA might find a discrepancy, something different between what you submitted and what they have calculated. How does the CRA decide to review your return? Unfortunately, the CRA doesn't publicly disclose exactly how they choose which returns to review, but certain factors can raise a red flag. For instance, large claims for things like medical expenses, charitable donations, or home office deductions might draw some extra attention. The CRA also makes a point to review meals and entertainment expenses for businesses thoroughly, because those can often be conflated. Additionally, if you've claimed significant expenses that reduce your taxable income, the CRA could take a closer look to ensure those claims are valid. Steps to take. So let's say that you've received an NOA and there's a difference between what you filed and what the CRA has assessed. Here's the steps you should take to ensure that you avoid additional scrutiny. Step 1, don't panic. Firstly, don't panic. Remember, this is a routine activity the CRA does every year. Take a deep breath and read through the notice carefully. The NOA will explain any adjustments made by the CRA, and understanding this is your first step. Step 2, compare the numbers. Next, look at the amounts on the NOA and compare them to what you originally reported on your tax return. Discrepancies are often due to missing documentation, especially for things like medical expenses or charitable donations. For example, if you claimed dental expenses but didn't submit receipts, the CRA may deny that claim. Step 3, follow-up actions. Once you've identified why there's a difference, you can take action. There are two main ways to handle discrepancies: filing an adjustment or a notice of objection. For personal tax returns, you'll file a T1 adjustment. For corporate tax returns, you'll file a T2 adjustment. If the issue is missing documentation, you can file a T1 or T2 adjustment through the CRA's refile service. This allows you to submit the necessary receipts or documentation and request a reassessment. However, if you believe the CRA made a calculation error, you will need to file a notice of objection. You have 90 days from the date of the NOA to do this, so make sure you act quickly. If you miss this deadline, you miss the opportunity to object to their calculation. For more complex issues like classification disputes, where the CRA has classified an asset sale as business income instead of a capital gain, you may want to consult a tax professional. An example would be if you sold a piece of land and reported it as a capital gain, but the CRA considers it fully taxable income because they view you as being in the business of flipping land. Step 4, payment considerations. If your NOA shows that you owe additional taxes, you aren't required to pay the amount in dispute while your objection or reassessment is being reviewed. However, interest will accrue on any outstanding amounts, so it's usually a good idea to pay what's owed to avoid additional charges. In some cases, the CRA might allow you to defer part of the payment, especially if your dispute involves something like a charitable donation credit or a tax shelter. Step 5, wait for the notice of reassessment. This is the waiting period. After you've submitted your objection or adjustment, the CRA will issue a notice of reassessment. Be sure to review this notice carefully to ensure that it reflects any corrections or adjustments you submitted. If the CRA continues to assess penalties or interest, you may be eligible to apply for taxpayer relief by submitting the taxpayer relief form, which you can find on the CRA's website. Step 6, what if a reassessment is not approved? If you disagree with the CRA's reassessment, you can appeal to the Tax Court of Canada within 90 days. It's important to get professional guidance here, as tax disputes can get quite complex. If necessary, you can also take your case to the Federal Court of Appeal, and in rare cases, even to the Supreme Court of Canada. But keep in mind that this process can be long and costly, so make sure you're prepared. In summary, receiving a notice of assessment is part of the tax process, but it's important to handle it properly. Carefully review the notice, Take appropriate action and don't hesitate to consult a tax professional if needed. By taking these steps, you can manage your tax situation efficiently and avoid any unnecessary penalties or interest charges. Thanks for watching, and if you have any questions, reach out to our team by visiting madanca.com or clicking the link in the description. Like and subscribe for more content like this.